Welcome back. This is World Insight with me, Tian Wei. The China Securities Regulatory Commission and the Ministry of Finance with the U.S. Company Accounting Oversight Board signed recently a cooperative supervision agreement, taking an initial step toward resolving the auditing dispute surrounding U.S.-listed Chinese companies. The agreement sets out specific arrangements for conducting inspections and investigations by both sides through relevant audit firms with respective jurisdictions. Over the past few days, many in China and the U.S. have been discussing the real significance of this latest agreement. I also invited both sides to compare notes. In New York, Anthony Chen, former J.P. Morgan Chase chief economist, in Beijing, Qu Qiang, assistant director from the International Monetary Institute from Renmin University of China. Gentlemen, welcome to the program. It is being termed as quite an achievement, particularly given the current geopolitical climate. What do you make of the significance of this agreement?
I'm actually very encouraged with this agreement. 3 years ago, I was in Shenzhen in China as a keynote speaker in an IPO conference. And these were issues that everybody was talking about, whether we would reach a compromise. At that conference in China, I predicted that the Chinese and U.S. regulators would eventually reach a compromise, because the reality is that when you have the two largest economies in the world, they cannot be at bitter odds forever. And so we're moving in that direction. We're not 100% there, but I'm encouraged that we're moving in the right direction.
What is 100% for you?
100% for me is to make sure that both sides agree on the language. There's still some issues as to whether or not the U.S. and the Chinese agree completely on the language with regard to the agreement. I think that's something that's going to be resolved certainly in the next month or two. My suspicion is that once again, a compromise will be reached, but it's going to be hard work, no doubt.
Mm-hmm. What kind of language?
One of the things that we're hearing in the United States is that the U.S. regulators would like to go in and talk to almost any company, audit any company. And there's some talk that in China, perhaps, the Chinese would like to have or play some sort of a role in the selection of these companies. So these are small things that have to be resolved that I'm sure will be resolved through compromise.
Well, I think this is, as Anthony just mentioned, I think it's really important because everybody understands China and the U.S. is still very important to each other. And we've been sharing a similar and same problem in the recent decade. Just take a look. Productivity is still low, not making any breakthrough in technology. And we have been issuing a large amount of the currencies, comparative effective assets. So the prices are set too high. What we do need is we both need good companies to match for those capitals, to be responsible for the investors, and to create wealth and a profit for both of our country and both of our people. And even more, the spillover effect, the positive effect, can be affecting the whole world. I don't think, well, if you want to decouple both of our economy, I don't think this is a great time. Actually, this is probably the worst time to decouple both of countries. I think this is the moment that we need a common practice. We need a common effort to deal with our common challenge.
The other thing is the participation of Chinese auditing companies. We understand there are quite a number of them that are already recognized by the U.S. authorities, and therefore they could do the auditing of Chinese companies trying to be listed overseas in the U.S., for example. Now, what are these qualifications? Do you see the pool is likely to be further enlarged if agreements between the two sides becoming ever more promising for Chinese companies, or the other way around, Tony?
Well, what we're hearing here in the United States is that the U.S. regulators would like the opportunity to vet these companies. They have not indicated that there's going to be a limit or minimum number of companies. Once the U.S. regulators are convinced that any number of these companies are getting the job done, I don't think the numbers or the breadth of these companies will be a real limitation. Just the fact that these regulators in the United States want to make sure that the information is accurate for U.S. investors and satisfactory. That's going to be the main criteria.
Chinese or international auditing companies, to the Chinese companies trying to be listed in the U.S. market, do you think they have a preference, usually?
Well, they do, actually. But I don't think this preference comes from any sensitive reason, but because sometimes this kind of auditing requires lots of experience and also requires your understanding about both of the sides of the laws and the regulations. So certain companies, as they've been learning, the learning curve is very long, has been doing lots of cases. They've been grasping a lot of uncharted regions, waters. So they know somewhere they can go, somewhere they don't need to go. And this experience needs lots of cases to learn. So, but as more of the details been revealed of this agreement, I think more companies will learn these rules and can join in the pool.
One of the things that we have seen is about the so-called sensitive information, personal information and other information of different categories, how two sides would process that, and also how those information will be made available to both sides. Chu Chang, tell me more about your thoughts on this front.
I think, according to my knowledge, I think both China and the U.S. authority are tough, and they have their principles. The result that we see right now is because that is very, very possible that both of their principles are respected. So I think they probably already find a way to do that things in a reciprocal way. For example, right now, I've been asking some officers in China. They've been saying, okay, America allowed China to do some special treatment on the working paper of the audit, so that the sensitivities will not be revealed, but also the important fiscal numbers on the accounting side will be given to U.S. So I think this is a good start.
Both sides are moving in the direction of reaching a compromise that both sides could feel comfortable with. But we will see that this is only the first step in a long journey. And so we know that the journey has to be resolved before the end of the year, but the process is still at the early stages.
Is there a possibility that with geopolitics and political seasons in both countries, that the category of so-called sensitive and personal information will be ever becoming larger and therefore more challenging to deal with? Tony?
My hope and expectation is that that doesn't happen because there's too much to lose on both sides.
Tech companies usually have a tremendous amount of data. Of course, this is one of their assets, but at the same time, it also brings up political sensitivity. Chang, tell me more about your thoughts on that.
Well, I think this concern is absolutely very normal, and not only between China and the U.S., but if you take a look at currently, the European Union are also putting on investigations on the big American tech companies' use on the European customers' data. And I think China and U.S., if both sides can work out a solution on this problem, I think it will give us an example, not only in both of our countries, but also in Europe, in Latin America, and ASEAN countries. They can follow suit.
Is that going to be the case, Tony?
My hope and expectation is that that will be the case because it behooves both countries to reach a path where both can actually live with the necessities and requirements of both countries.
Recently, there are a lot of discussions about the financial sector. What does it mean for the bilateral relations between China and the United States, two largest economies? And the rest of the world just say, you guys have to work it out yourself. We are not as big as you guys, so you better work out yourself. Now, we see different aspects of this. For example, in Jackson Hole, the recent conference on the central bank governors, of course, it's mainly from the Western economies. China doesn't participate. The U.S. Federal Reserve Chairman talking about the interest rates will further be increased as long as they take. Now, that message has received mixed reactions in China regarding what is likely to be the future of U.S. dollar, China-U.S. Financial cooperation. So, Tony, how do you see these different aspects of the financial sector likely to have an impact on the cooperation for Chinese companies listed in the U.S. market? And of course, hopefully the other way around too.
Well, the reality is that both countries have different problems or different issues. In the United States, for example, the inflation rate is much higher than it is in China. And so in the United States, they have to raise rates. Of course, that has implications for the value of the currency in China, because all of a sudden, if there's a differential in interest rates, it certainly puts pressure on the renminbi, but no choice. And the reality is that in the United States, there was a lot more monetary stimulus, a lot more fiscal stimulus than in China. The result was higher inflation, and now the United States has to raise rates. And that was similar, by the way, in many Western economies, certainly including in Europe. And that's why these central banks have no choice. They have to raise interest rates, or they certainly have to remove these inflationary pressures, which thankfully is not a problem in China at the moment.
You do not see a direct impact on Chinese firms trying to be listed overseas in the U.S.?
I don't see a direct impact, except that we know that technology companies, for example, are growth companies. And when interest rates are rising, because technology companies usually have a growth slant to them, and so the profits come later and later into the future, there's downward pressure on growth companies, and technology companies certainly are in that bucket. So that is the same kind of pressure that applies to U.S. technology companies as will apply to Chinese technology companies.
Yeah. Chang, your thoughts?
Well, I think right now, China and America do have a mismatch on economic cycles. America has to tame the inflation, very serious inflation, and China needs to deal with the slowing down of economy. So in history, we've been encountered that kind of situation. Well, normally when that situation happened, the reality will require us to work with each other, to cooperate. But the thing is, actually, the people, well, some politicians will say, okay, shut down the border, shut down the economy, shut down the cooperation relations with each other, and play the blame game.
Recently, Chang, you participated in a discussion I hosted earlier on the Asian financial crisis. There were a lot of lessons learned by Asian economies, East Asia particularly, regarding, for example, the financial security, including the relationship between their currency and the U.S. dollar. What about, the recent decision? Obviously, consensus demonstrated at the Jackson Hole conference. And what does that mean for China's overall analysis of the financial security situation, and also as a result, how will that trickling down to companies and the country's ambition to list it overseas?
Well, I think what you mentioned is, the gap between China and the U.S. interest rate. I think for China, the most important security concern in finance is the outflow of the capitals. When the U.S. interest rates are too high, Chinese interest rates are dropping, and there's going to be capital flow out. But I don't think this concern is valid, because according to my knowledge, that monetary authority in China do not want a thing to happen. China will not be like Japan, just to depreciate our currency like by 20% or 30% and allow the capital flowing out. China still have a manageable capital account. That's the first thing. And secondly, depreciation of Chinese currency is not good for China and also not good for USA. Just trust me, USA don't want Chinese currency to be depreciated largely. They will hurt both sides. So China in 1997 made a promise that we would not depreciate our currency. That's when Chinese economy is still small and weak. But right now, China is a big economy. I think we have all the confidence. China will not allow that things to happen.
Another question from a different angle. We have seen, as a result of the earlier chaos and lack of agreement, some Chinese companies already seeking to withdraw from the U.S. Financial market. Some have already sought their own path, for example, to be listed in Hong Kong or some of the Asian regional stock exchanges. Now, how do you see, Tony, this picture likely to change or not as a result of the latest agreement?
I think it is going to change. And in fact, I think that was a wake-up call for U.S. regulators to be more aggressive about trying to reach a compromise. Because when that happened, I talked to a lot of clients on that day, and it was a scary day because the indication was that that was the beginning of more to come. We also heard in the United States from sources that somehow the negotiations were not going so well. I spoke at another conference in the United States and I said, that's probably a negotiation tactic. You're going to hear that noise, perhaps even from U.S. regulators, just to make sure that the compromising is aggressive, that I didn't believe that they were not going to reach a compromise. I hope that that assessment was correct, because today we are much closer to an agreement. And that trend that was precipitated by a few companies pulling out hopefully will be reversed.
Well, we're seeing the midterm elections coming. And also, the president's going to be re-elected very, very soon. And the situation is very, very vague. So America, can their authorities still keep the same principle after the new election? And can all this agreement can be solid and valid until then? I don't think even America will promise that.
Consistency is the issue, Tony.
Yes, consistency is the issue. My hope and expectation is that when 2024 comes around, that we get a centrist candidate from either party to move in, and that we don't have extremes from either political party, because extremes from either political party are harmful to the positive relationship that I think we need between China and the United States.
All right. Last question for both of you. If you were the advisor to the PCAOB or to China Securities Regulatory Commission and Chinese Ministry of Finance, during what kinds of time frame do you see would be the smartest for the two sides to eventually work out a final agreement so that it will be less harmed by politics and geopolitics? Tony?
My advice would be to move as aggressively and as quickly as possible. Here in the United States, they seem to have a deadline to at least certify this agreement before the end of the year. And I hope and expect that both sides will move aggressively to meet that deadline.
Yes, same idea, ASAP, because what's gold right now is confidence and certainty.
Thank you so much, Tony Chen and Xu Qiang. Appreciate it. And that's all the time we have for today. If you'd like to know more, search our YouTube channel, follow us on Twitter and Facebook. I'm Tian Wei. Thanks for being with us. See you tomorrow.